Hello, Michael. I am looking at your workbook that you have provided me for review, and I've highlighted quite a number of entries. What I would like to make clear here is with this video, I wanted to just highlight some of the common mistakes that I have noted in your workbook. The first thing that I'm noticing, one, you're not understanding how to increase various accounts, assets, liabilities, equity, revenues, and expenses. That's the first thing. Secondly, I'm noticing that you're not understanding what the transaction is trying to accomplish. So we need to put those two together. When we look at the transactions, particularly July 1, where it says baking supplies here, you are purchasing supplies. That means that something that you're buying is going to be yours. It's an asset of yours. So you recorded a debit to supplies, which is good. The problem I see is highlighted here is that you're recording an expense, a credit to the expense. When you record a credit to expense, you're reducing it. And I want to say never reduce an expense. This project is not here to record correcting entries. And sometimes when you're correcting an entry, you will be crediting expense when you normally would not. We are recording transactions. We're not fixing mistakes. And sometimes when you have to fix a mistake, you'll credit. But generally speaking, for this project, you're going to be recording transactions and adjusting accounts. Therefore, it is not appropriate to credit an expense in any case. Therefore, any transaction that you've recorded with a credit to expense is incorrect. That's the first thing. In this transaction in particular, you're recording an increase in your asset and you're recording an increase in an obligation to pay. You have to pay this later. So that means an obligation. So taking a look at your chart of accounts, you'll say, well, I have a list of accounts that relate specifically to liabilities. Which one makes the most sense to me? And I would say wages doesn't make sense. Interest payable doesn't make sense. It's not paying employees. Accounts payable is my only logical choice here. So you need to show an accounts payable transaction. The next entry is the same thing I mentioned before. We're never, ever going to reduce our expense. In the transactions that you will see for the next 3 months, all of them are standard entries, nothing correcting. Therefore, it's not appropriate to decrease an expense. So when we are recording transactions, we need to know the following. Increases to assets are going to be debited. Increases to liabilities and equity are going to be credits. Increases to revenues is going to be credits. Increases to expenses is going to be debits. Why? Because an expense is a reduction in your equity. Therefore, this entry here should not be decreasing the expense. What you have done here with a debit to the prepaid and the expense looks perfect. The only thing is you paid it with cash, and I don't see cash in this transaction. The same here, I don't see cash in this transaction because you're paying for a business license and you're paying with cash. Therefore, you should not be reducing an obligation that doesn't exist. And secondly, you should never reduce your expense. It should never be credited. The same here. Again, office supplies debit looks good, but you should not be crediting an expense. This was paid with cash. So again, I don't see cash in this transaction. The same here. I'm not sure why depreciation expense was used here. I'm not really sure. There's no reason to decrease your depreciation expense. There's no need to record a depreciation expense. What you're recording here is the purchase of office supplies on account. So I don't see accounts payable. I don't see any kind of obligation. So that one is incorrect. The next entry is the same thing that I've seen before. There's no reason to record a debit to your accounts payable. You have purchased advertising for cash. So and cash seems to be missing from this transaction. Accounts payable is not applicable because you don't have to pay it later because you've already paid it. Same thing here. The office supplies is an asset and you're increasing your asset. Why would you decrease it here? Credit, it should not be done. And you should not be debiting accounts payable because you paid with cash. The same thing here. The prepaid insurance is absolutely correct, but you're increasing your asset. A prepaid, as you can look at your chart of accounts, is an asset. So you're increasing that. But I see here on your entry that you have been, you're crediting it. That's not correct. Not only that, this entry was paid with cash. You paid $2,400 for insurance that starts August the 1st and goes 12 months forward. That means it's prepaid and cash. So I don't see cash in this entry at all. And then secondly, I don't see your wages recorded, and I don't see the receipt of telephone. That needs to be recorded. Your sales transaction is not correct either. Again, it's a misunderstanding of how to increase revenue and how to increase assets. There is cash was given to you for your sales, and you have to get the extra money the very next month. So that means you have a receivable. But you want to increase your receivable, you want to increase your cash, and you want to increase your sales. Sales is a revenue account, and it's only increased with credits. So this entry needs to be adjusted. And I've noted the same type of errors before. Here is the same thing. Expenses should never, ever be credited in this project. We are not fixing anything. Credits to expense means you're adjusting a mistake that was made. And under normal transactions entry, you never, ever want to decrease your expense. So in this case here, we're paying our employees because we are obligated to pay them. I don't see cash in this transaction. The same here, we're paying the telephone expense. So the telephone expense should have been recorded in July. The payable should be removed, which you did here. I don't see cash being affected. The same thing here, you're recording the baking supplies, but you're not paying for it now. You're actually incurring obligation to pay later. And these entries are essentially the same kind of error. What's happening here, you're just not showing the payment that was made in cash, and you're crediting expense when you should be debiting. This is true with the rent expense, both in August and in September that occurs. Remember, each one of the entries, you have to record your receipt of telephone bill and to be paid later. You also have to show the actual fully completed revenue recognition, which means you increase your revenue account, bakery sales, with a credit. You increase your cash and your receivables with a debit. So this entry obviously is not in balance, but it also has to be recorded correctly, meaning the revenue should never be debited. Now, again, you have to record your wages payable. I think you recorded it here, but you recorded it in reverse. But you'll need to record, make that change there, and you'll also have to record your telephone receipt of the bill. There are a number of transactions I've highlighted here. I'm going to attach this workbook with my highlighted changes. But my hope is if you could reach out to me if you have any questions. But the most important thing is knowing how to increase various accounts when you're recording the transaction and understanding what that transaction is trying to accomplish. That's going to be the keys that you'll work together. And then if you have any further questions, looking at your chart of accounts to identify what is an asset, what is an expense, and how to record them. I hope this video is helpful to you, but please, by all means, reach out if you have any questions. And as I said, please reach out if you have any questions at all. I will be here to help you. I think the highlighted areas are one mistake based. Just repeat it more than once, so don't be overwhelmed by that. Just note that these common errors are easily corrected, and if you have any questions at all, please reach out, and I will be here to help you.